Hi guys, Linda here. Welcome back to my channel. If you're new here, thank you for clicking on this video. My name is Linda, and on this channel I share content beauty related about my lifestyle and entrepreneurship and finance. If you're interested in any of this content, any of these things which I mentioned, then please stick around. Remember, click on the subscribe button just right below, and also turn on the post notification bell right beside the subscribe button so you don't miss any of my uploads. So guys, in this video I'll be talking to you about the reasons why you should not be keeping your money in the bank. If you want to know the reasons why I am saying this, then please keep on watching this video. So without further ado, let's just get right into this video. Part we were taught in school, either at the secondary school level when we're doing economic stats. It's always good for us to save money. It's good for you to save money for the rainy days. If your mom gives you, let's say, 100 naira, it's good that you put at least 20 naira aside or 40 naira aside for a rainy day, because you really wouldn't know when you might need that extra money to just sort out certain issues that might arise. It could be for health care, it might just be to sort out, it might just be for whatever unforeseen circumstances. So it's always good for you to save money. But then in most cases we have been advised solely to save, but we're not really advised to invest our money, which is really bad. So the number one reason why I'm saying we should not be keeping our money in the bank is, so we save this money in the banks, but we don't know what the bank used this money that we save up to do. Because in most cases, we tend to think that, oh, we just put your money in the bank and the bank just holds your money without doing anything with your money. And that is very false, because there is a percentage of your resources that the bank should save with the CBN, while the remaining percentage of the money, that the total money that the bank has, the bank can use that money to loan to businesses, can use that money to just invest in wherever thing they want to invest your money in, and be earning interest on your own money. And the sad part is you don't even get to have a return on their investment from the investments that they made with your money, because in most cases your account could be a savings account that you tend to withdraw frequently from. So for that reason, on a monthly basis you don't get anything from the bank, because of course this account is not an account that you just keep as a fixed deposit account. And even when this account in question is even a fixed deposit account, the interest rates are so low that you don't actually get a good exchange. You don't get a good return for saving that money in the bank. And in most cases the rates are somewhere around 0.15%, or if it's very high it's around 1.5%. Definitely the bank is definitely earning more from the money you're saving with them than when they loan this money out to businesses. Of course, the businesses tend to pay a higher interest rate on the loans in which they take from the banks. So another reason why I would like to say that you shouldn't be leaving your money, especially when it's a large chunk of money which is not being saved for a particular purpose, like let's say your rent or something. Another reason why you shouldn't be keeping large chunks of money in your bank account is because of the inflation rates. Because on a day-to-day basis money is constantly losing its value. If you are somewhere, if most people, if you are actually aware of what is going on right now on a global scale, you realize that the inflation rate in most countries have gone into like a double-digit inflation rate. So you find that if in the past 5,000 naira could buy me a wristwatch like this, right now I can't even buy a wristwatch like this with 5,000 naira. I need to have at least 15,000 naira to 20,000 naira to buy a decent wristwatch. So you now see that you need to have more money to purchase an item right now. By that, I just want to just break down these two concepts of the inflation rate, the purchasing power. I think those are the two terms I want to just break down for you guys in this video, so you get to understand these economic terms on a layman basis. Your purchasing power is how much you are willing to pay for a particular goods or service, while the inflation rate is how much value your money has lost over a period of time. Because if the inflation rate is constantly rising, so it just means that the prices of goods and services in the market is going to keep on rising, because of course the inflation rate is high. But when the inflation rate is going lower, it means that prices are going to be going lower, and therefore the currency in question has more value. But when the inflation rate is high, the currency is losing value, and therefore the purchasing power, how much goods and services your money can buy you, becomes lower, because of course your money actually is losing value on a day-to-day basis, and therefore inherently has no value. And so therefore you keep this money that is losing value on a day-to-day basis in the bank, without even trying to put this money in various investment opportunities you can actually put this money into. You find that the bank will therefore just end up using your money to make investment. That will definitely get the bank investment, a return on investments, because if the banks are investing your money for you for their own personal gains, not for your own personal gain, if the bank is going to give you a return on just keeping your money there, it's going to be very, very little. So you want to try as much as possible to ensure that you're not just keeping your cash sitting in the banks, because on a day-to-day basis it's losing value. It is losing value. You see that the government in your country, they keep on borrowing money, and in most cases, the more these countries are taking loans from foreign countries, or taking loans from various international organizations like the IMF and the World Bank, they tell your country that they have to devalue the currency. And by the time your currency is being devalued, it just means that automatically you're going to experience more and more inflation, because your currency is losing value when the government decides to devalue it. Because when your currency is devalued, it just means that the amount of, you need to add more of your local currency to be able to get even a dollar of foreign currency, or a pound of foreign currency. So therefore, it's just not wise for you to just have your money sitting down in the banks. So the alternative way for you to invest your money is in acquiring real estate. Let's say you can't afford to buy a house now, or you can't afford to buy an apartment. What you can choose to invest your money is in buying things like land. If you can't afford to probably buy a house, buy an apartment, or just buy land and start building immediately, just buy land, and just buy a land in an area that is appreciating, so that as the years are going back, the value of the land is actually gaining in value, instead of your money just being in the bank and losing value. If you invest your money in land, the land is definitely appreciating as the years are going by. You can lend your money to friends, family, relatives, to people who you know that are credit worthy. You can lend this money to them at an interest rate. Let's say you can tell them, okay, I'm going to lend. Let's say you know that this person needs money for a particular business, a particular investment, and they are willing to give you an interest rate of, let's say, 5% return on the amount you give them, or 10% return on the amount you give them. I think that's a very good business deal. Or even 20%. If you can find somebody who can actually give you 20% return on the amount you loan them, that's definitely a very good deal. Make sure you take advantage of it. You can just use this as an opportunity to just earn an extra income from your money. Another thing you can choose to do is, I don't know if this thing is happening on the globe, this particular business model is happening all over the world, but over here in Nigeria, there's something they call POS. If you have so much liquid cash available, why not just start like a POS business whereby people come and get cash from you, and then you pay, and they pay you like, I think 100 naira or 200 naira, depending on the amount of money that you are withdrawing from them. I think it's 5,000 naira, you're going to have to pay 100 naira. If it's 10,000 naira, you have to pay 200 naira. And if it's 15k, 300, 20,000, 400 naira. And eventually, if you have like 20 people do that with you in a day, without you even doing so much, just have a POS and have liquid cash with you, you're literally going to be earning somewhere around 5,000, 10,000 naira, 20,000 naira, depending on the volume of transactions you do on a daily basis. So let your money work for you. Don't just sit down and do nothing with the money you have available. Just let your money work for you. So another thing you can do with cash that you have is, of course, you can invest your money in various cryptocurrencies. If cryptocurrencies are illegal in your country, you're gonna have to find an alternative way in which you can actually purchase this digital assets, because cryptocurrency is sort of like the future. I don't want to say it's sort of like, it's definitely the future. So you want investing in cryptocurrencies, you also want to make sure that you're buying coins you want to make sure you're buying these coins when the prices are the lowest. You don't want to be investing in these coins when the prices are already very, very high, because in most cases when the prices are very high, it's definitely possible for the price to go down. But when it's very, very low, like how low could it possibly go? So you just find that if the prices of those coins are not so are already low, if it's going to even drop, you wouldn't lose so much. Unlike when it's high, if it wants to drop, it could go really low and you could lose more than half of your investment. So just be careful when it comes to investing in cryptocurrencies, of course. And another alternative in which you can invest your money in is investing in business stocks, investing in treasury bills. Depending on if your country sells treasury bills or even treasury bonds, you can choose to purchase this treasury bills, and they tend to have if they tend to have a very high interest rate. So if it's something you're opportune to invest in, or even buying what do you call it, as even buying shares of international companies like in the US, it's usually very, very lucrative. So if it's something you can get your hands into, get your money into, instead of just leaving your money sitting down wallowing away in the banks, please diversify into these other mediums in which you can actually invest your money in and earn more out of your money. So guys, thank you so much for watching this video, and if you got value out of this video, please make sure you give this video a huge thumbs up, share with your friends that also may get value out of it, and don't forget to subscribe to my channel if you're not yet subscribed. Thank you so much for watching, and I'll catch you in the next one. Until then, remember, be bold, have courage, live a positive life. I'll see you in my next video. Bye guys.